Hey, it's Rick with a market recap for Wednesday, January the 18th. Although it seemed like a pretty nasty day today, market's down between 1% and 2% across the board. It came as pretty much exactly as I drew it out on Friday in my last video. For any of you that watched that one, at the top here is the closing of the S&P, and I drew a trend line from the highs and then a trend line from the lows. And I was indicating how the volatility is getting shallower as we're moving forward. And this is a good thing. And I did draw it out that I expected it would hit this upper trend line, fall back to the bottom trend line, and then hopefully come back up here through the upper trend line again and then retest it. And I've drawn it out on the bigger chart below, what I'd like to see over the next 2 to 3 weeks. And if this, like today was a bit bigger, wider than I had expected, but not too concerned. What does concern me is the volume. The volume today was quite high, which indicates this is institutions were unloading. So I was hoping that these moves would come on a little lower volume. So that's the one disconcerting note here. But if this, so I've drawn this in, and if it pans out like this, I'm going to get uber aggressive, and I'll be recommending you get as much as 100% invested. And I will get a little more aggressive. We will have to be concerned, though, that just because I drew those lines doesn't mean that's going to happen. Because if we go back to the weekly chart over here, I'll expand this out a bit. It's not still not inconceivable that we could just plunge through the lows that were set last December and then head down to the bottom of the bigger trend lines, which is the bigger picture. So keep an eye on it. But again, I'd like to draw this out, and if it follows this, then I have exactly, I know what to do. And if it goes down below, we'll be out of the market, so back in cash, so no worries there. The other thing of note on here is that you see these three moving averages. The green is the 8-day, the red is the 21-day, and the bluish one is the 50-day. And they're all really tight together. And generally this means there's going to be a fairly significant move one way or the other that will spread out these moving averages. So looking for that to happen. It shows up better on some of my positions. I'll just show you here. CPRX is an example. You can see the 8-day is up here, 21-day here, the 50-day here, and they're nicely spread out and all heading in the right direction. And actually, as I go through these, I added to this position today, by the way. They're all of these all of the stocks that I'm in have pretty much that same characteristics, where the 8 is above the 21, which is above the 50, which is above the 200, of course. So this is something you want to look at in the stocks that you own and tracking in the charts. This is ideal, this kind of railroad tracking, going from left to right. So not much else to add. I mean, I've added I added one new position, 2 new positions actually since Friday. This one on the downtrend line break. It had a nasty day today. It got up near the top and then had a bad close pretty much right where I entered it. So no gain, no loss there, but it's not performing. But the market dragged it down. And then another one I've been keeping an eye on for a long time, SCPL. And then my notes from last week say, not until this hits new high ground would I look at it. And sure enough, it did today. It gave me an alert when it went over these highs. So I bought it. And it's right at the same price I bought it. And everything else is pretty much the same. I did get stopped out of one position, and I my cheese trade, I exited on Monday when the Canadian markets were open, but the US was closed, and I managed to get almost the very top. So that was a good thing. That's it. That's all for now. Maybe another update in a couple of days. We'll see if this this pattern follows through, and if so, we'll be getting a little more aggressive probably in the next 2 weeks. Cheers.